The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, so we got back to trading after the 3-day holiday weekend. We had kind of a mixed bag in the markets with corn and beans, a couple of cents either side of unchanged, while we saw some pressure in the wheat market. That might have been tied to a higher U.S. dollar. We're going to talk about what's happening in the trade. Joining us for a conversation, Jim McCormick with agmarket.net. Jim, always good to talk with you, and Happy New Year. Haven't talked to you in the new year yet, so thanks for joining us again on the show. Hope you're doing well.
I'm doing well. Happy New Year's to you and your audience, and I hope everyone stays warm. I know, Jesse, talking to you out before line, you guys are dealing with snow. Where I'm at, outside of Chicago, the snow came and went, and now it's just the bitter cold temps. We are not even above zero. We've got kids out of school, so we are definitely in the throes of winter, plain and simple.
We are winter through a big old gut punch to us, and yeah, the Mid-South, we don't get a lot of snow. We got about 7 inches here in Nashville and Music City, so it's definitely an interesting weather situation across the country, and hopefully folks are staying warm. I think, though, too, you know, looking at these markets, kind of a cold market, I guess, for lack of a better term, a mixed bag, but really felt like we were still kind of digesting some of what USDA threw our way on Friday. Couple that with a higher U.S. dollar and just kind of made for a blah-ish looking day in the grains, Jim.
I think you nailed it. I mean, we're definitely have a little bit of a hangover report. The reports on Friday, I'm sure you covered it already, has definitely been bearish. I mean, there really was hardly anything positive out there on that report except for maybe the winter wheat acres, and that's about it. So we definitely had some hangover. It was a 3-day weekend. A lot of people are hoping for a change in trend. Lots of times you do see that coming out of 3-day weekends. And, the market tried to find some support overnight, at least in the corn and beans, and even the wheat to a little bit of extent, and it just didn't have a whole lot of success with it. Now, late in the day, the beans did come back a little bit. But yeah, we're still struggling a little bit. The fact of the matter is the funds are carrying a really big short position, and at this point, they don't seem to be in a big hurry to get out of it, unfortunately.
Yeah, that short position, it's interesting as we watch that CFTC data. And truthfully, Jim, you could probably expand upon this more. I don't feel like funds are going to do any sort of short covering until something hits this market news-wise that is bullish. I just feel like they're pretty confident right now hanging with the big short positions that they have, Jim.
Well, exactly. I mean, the reality is it's worked for them. I think the funds have been sellers in the beans this week. As of Friday, we're like 7 weeks in a row, carrying some of the biggest short positions they've carried in multiple years. And when you look at the corn, beans, wheat, cattle, hogs, and kind of cotton position combined, they're carrying a short 450,000 contracts. The last couple of years, they've been long anywhere from 400,000 to 800,000 contracts. So, yeah, we haven't seen this for a while, but unfortunately, we've structured the market into a bear market structure in the grains. And what I mean by that is there's carry in the market. So these funds just stay short, and instead of being penalized to roll it like they do in bull markets, they just buy low and then turn around and sell it higher the next month out and then wait for that next month to fall where they got out at. And it's going to take something to get them out. Now, the market will eventually get out. I mean, that's why you always hear the Elliott wave counts talk about ABC corrections and 5-wave counts. This market will not go straight down. We will have rallying opportunities, but at the moment, we have yet to see any reason to knock these funds out of the shorts. I think it will come eventually, but timing is everything.
Well, Jim, as I look at these markets too, and as we digest the numbers that USDA threw our way, I know there's a lot of farmers and ranchers who are pretty disappointed with how the markets look right now. And in terms of trying to make money, doesn't seem like there's a great opportunity out there to make a whole lot here, especially with the corn and soybean markets right now, Jim.
Right now, there's no doubt about it, Jesse. This is a problem. I mean, if you were a producer and you sold a lot of grain early in the game, these later bushels are being sold at a pretty low price, but maybe you've got an average price when it's all said and done above your cost of production. But unfortunately, there's a lot of producers just did not get this grain market sold for various reasons this summer. A lot of it was because when the rally did happen, there was a very big fear of what size of crop we were going to have, and the producers just didn't feel comfortable selling it. And right now, when you look at the percent sold, it is, I would argue, kind of a historically low number right now from what some of our commercial contacts are saying. Some farmers are carrying up to 75, 80% of the bushels are unsold, where normally they're about 40% sold in certain locations. So you now got a negative cash flow for old crop for some producers. New crop right now, unfortunately, is also, with the break in prices, for the most part, are now negative cash flowing. I know the U of I sent out some generic balance sheets late last week that were showing it really didn't matter where you were at least in the state of Illinois, it was going to be a negative cash flow season. It was just, how negative it was going to be. So right now it's definitely a little bit frustrating, but hopefully we can get somewhat of a dead cat bounce, at least somewhere down the line, that we traditionally have.
A dead cat bounce of some sort would be nice, because I think, Jim, to your point about the lack of crop that has been sold or marketed, there's really I don't know if there's a right answer. Obviously, every situation comes down to your specific operation, but I know there's a lot of folks that at this point in time, those bin doors are slammed shut, hoping for something here to try and make sense of, what they have, and realizing that they might have missed the opportunity here back last summer, Jim.
Well, the reality is that's what it feels like right now. I mean, sometimes you just got to be honest, you missed it. I mean, we're human. Marketing is one of the more challenging things to do it, but sometimes you just got to take that data that you have now and run with it. I mean, I know a lot of producers are questioning us having essentially a record crop, which is what they came out with on Friday. But the reality is that's the number we're going to run with, and we're going to run with it unless the government changes. And the fact is that gives a commercial incentive just to kind of wait the producer out, I fear. I mean, money's going to be tight. We know we got the interest rate hikes have come on. The cost of money is building. And I think there's going to be pressure for producers to sell some of that grain that's in their bins, as opposed to borrowing so much money to finance this upcoming crop, which the price of, trying to get it in has come down, but it's still going to be quite expensive compared to, recent history. So it's a situation that, it's a bad one to be in right now. And the only thing I tell producers out there, Jesse, is, the market, unfortunately, doesn't owe you a profit. You've got to understand that. If anybody's in the hog industry right now knows that the hog industry, has been brutal recently, and the grain market could do the same thing. So sometimes you got to figure out where you're going to cut your losses and try to move on. My recommendation for producers out there that feel like they need to get sales done, try to take more of a mathematical approach to it. Look at the charts, look at where you want to start selling it, and get the orders working. Because if we would get a rally, and I do believe we will eventually, my guess is it's going to be relatively short-lived, because unfortunately there's a lot of producers out there that are going to be trying to sell this rally.
Well, and to that point too, Jim, I was going to ask, I feel like at this point in time, if you're doing any sort of marketing, I'm sure there's, plenty of tools in the toolbox. You could get a little creative to try and leave your top side open in some cases. I know it depends on what exactly you're doing in terms of your marketing, but there are some options out there to try and minimize as much risk as possible, even with these lower prices, right?
Well, you've got it. I mean, it depends how much risk you want to take. Some producers may want to buy calls now with the anticipation that we will potentially get a rally. Some producers may, want to maybe try to buy some paper after they do sell the rally. I mean, it's always darkest before the dawn, as they say. Right now, it's pretty dang gone dark and cold out there. And I know it's incredibly frustrating, but, don't give up hope just yet. I mean, like I said, the numbers definitely look negative. You got to be honest with yourself. But the reality is the safrinha crop, it has yet to even be planted. They're dealing with, interesting enough, almost too much rain in portions of Brazil right now. If that would continue, they delay getting the safrinha crop planted, then all of a sudden we're going to talk about the safrinha crop running out of water, which could give a reason for the rally. The U.S. corn acreage, I think you're going to get a debate now. Like I mentioned, the reality is the corn balance sheets and the bean balance sheets are really, really ugly. I think you're going to start hearing a debate of how many corn acres are we going to lose due to the negative cash flow, where people may choose to go to a little bit less expensive crop to plant. Those are the storylines that I think that will eventually give this market an opportunity to rally. But if you get that opportunity, I'm going to fully throw it and say, hey, look, you need to sell into that. And if you want to play the what if, buy the calls. I mean, because I think, Jesse, what we went through this last year, it was a really strange summer. We had a lot of heat, record amount of heat. We had dryness. And look where we ended up at. That is probably going to limit some of the bullish enthusiasm here in 2024. So maybe sell it. If you get the opportunity to get above break even, sell it, and then maybe use an option play for the what if, because this may be the year where the market does react, because maybe the crop does fail. Because we do know, looking at the drought monitor, there's parts of the country, especially like in Iowa, that are incredibly dry as we speak.
We are joined today by Jim McCormick from agmarket.net as we recap the market action coming out of the 3-day holiday weekend, kind of a mixed bag in grains and livestock. And Jim, something else I want to ask you about too. I mean, with prices where they are at, let's look at the demand side of this picture. How cheap do we have to get to maybe spur some more demand potentially for U.S. commodities? Is that something that could maybe help give a lift to this market if we can find some demand here, Jim?
Well, I think it would help. I mean, we did get a little bit of revision on the demand side, at least on the corn balance sheet, Jesse, on Friday. But unfortunately, the offset of the increase in demand was offset by an increase in production. So it kind of muted it. But yes, if we could get more demand, that would help. Mexico for corn has really done the heavy lifting on the corn side of the equation. If they would continue, that would help. There was a little bit of negative news on the world front. The USDA raised the China crop by 10 million metric tons. Now, in the big picture, Jesse, we even like to take China out of our balance sheet when we look at the world supply demand, because they do not export, they only import. So in that case, I don't think it's a major game changer. But the reality is, I think there was some hope or optimism maybe China would come in and buy some U.S. corn. Well, with them having a 10 million metric ton crop bigger than what the trade was thinking, that probably takes the odds of them getting aggressive, buying a lot of U.S. corn. It decreases the chances. They always could, but it does decrease the chance.
Another thing too, thinking of demand, I know we have a lot of shipping concerns around the world between the low water on the Panama Canal, all the issues in the Middle East and the Suez Canal right now. We're seeing a lot of the freight rates get jacked way up, and a lot of shippers having to go around the Horn of Africa. How much do you think some of those issues are playing into our markets right now, Jim?
Well, hopefully it'll play into being a little bit more friendly. I mean, it just becomes a lot of the cost. I mean, it's kind of a two-edged sword, like you said. I mean, getting stuff around the Horn of Africa, I've heard it's costing an extra 10, 20 days and an extra $1 million. So it's getting more expensive. So you're like, okay, if I'm going to get it to, Europe, that's fine. But if you're trying to get it to Asia, you can only ship so much off the P&W or out of LA per se in boxes. The most efficient way traditionally is get it down the rivers and go through the Panama Canal, which has got a problem. So, I mean, it's kind of you make it up in one hand and you lose it in the other hand right now. And, we'll see. I mean, if the dollar would start to work lower, that would help a lot. It rallied quite a bit today. And I think that was part of the reason why the market was under a little bit of pressure, was that higher dollar. But yeah, the real thing we need to see is some export demand. Beans. I think the last flash sale I saw for bean demand was like December 19th. So we've gone almost a month since we had a big flash sales of beans. And that's, it's not unheard of for this time of year, because this is when the Chinese transfer their buying from Brazil to US. But, that just shows you what happens. And if you look what the market's done since China quit buying, the market's going down. I mean, it is, the market's job right now is to get low enough to do two things: potentially discourage acres being planted, as well as encourage demand.
And thinking of the acre side of that, we kind of alluded to this earlier. I want to talk a little more about that with you. Your thoughts, maybe what you're hearing from producers in phone conversations, or traveling around. It's meeting season. Seeing these prices, I wonder how much are we going to see corn, bean, wheat acres? I'll throw cotton in there too. Cotton prices have been looking pretty good. How much shifting around do we think we could see by the time spring planting rolls around? I would have to wonder if some of those fringe acres could potentially be at play here, some of those non-traditional corn and soybean areas of the U.S., Jim. What do you think?
I think you're right. I mean, in general, American producers tend to produce what they're going to produce. I mean, they get into a rotation, they stay in a rotation. if they try to break out of the rotation, usually it bites people when it's all said and done. But the reality is, when we're, like I said earlier, we're running a lot of these numbers, unfortunately, are running into negative cash flows. So I do think you're going to see some fringe acres shift. The Dakotas are going to be interesting. You're bringing on more of these crushing plants in that part of the country. So it's going to, you take the more crush facilities coming in, being built up in that part of the world, combined with higher input costs for corn, it's going to say, hey, go to beans. And then maybe even in parts of the Midwest, you're just going to see some guys shift. And that debate is going to get very, very heated over the next couple months. We'll have in February, we'll have the USDA outlook for them, and then we'll have the survey numbers here at the end of March. But there's going to be a real debate, I think, of what producers are going to do. There's also a debate right now, how many acres, safrinha acres, we're going to plant down in Brazil because of the break in prices and the cost of everything right now. So those are the things I think potentially could give this market a rally. But, you got to remember, Jesse, if you only lose 2 or 3 million acres of corn, and we manage to have a trend yield with our carrying where it's at, the fact of the matter is that acreage rally probably ought to be sold, and then defended in case we would happen to have a weather problem. I mean, the reality is we're going the wrong way. We are building stocks domestically and internationally as a whole. And when the market's doing that, in general, the market weakens as it essentially is in a mode to dissuade production and essentially stimulate demand. So until we see a change, a wholehearted change, folks, of either losing production in South America, where they get into the bean yields and they see, wait a second, those bean yields are not there. There's some people saying that crop's down to 130. The USDA is at 157. You start hearing more people get confident that you're below 150, 140. That's where you're going to get the psychological change. But until you actually see drastic losses or drastic acreage adjustment, and essentially the net world stocks going down, you've got to take a bearish attitude, I believe, to the market and say rallies are meant to be sold.
Livestock thoughts from you. Cattle had a decent day Tuesday. Hogs, though, pulling back finally after we saw some quite a number of sessions in a row higher in hogs. Your thoughts on this protein sector overall, Jim? What are some things that stand out to you right now?
Well, the cattle market's starting to work a little bit higher. I think it's trying to take out some moving average resistance. I'd like to see that happen. I mean, we know cold weather is definitely, tends to obviously slow down the production of cattle, beef supply and all that. So that's trying to bleed into the market. Now, I'm a little bit concerned about demand because, it's bitter cold right now. No one wants to go out to eat. But, the reality is that's only going to change here in a couple, within a week, 10 days. We're going to be back into the 40s in Chicago. So hopefully that's a good sign. The hogs, like you said, they're correcting a little bit. The big thing right now is just like any of these commodities right now, Jesse, it's all about demand right now. We need to keep this demand coming to the market. Without demand, the market's going to continue to work weaker.
Definitely. I couldn't agree more. Any other final thoughts from you, Jim, before we let you go today? Obviously, watching that dollar, we alluded to that, higher on the day Tuesday. We're watching energies, outside markets, all that stuff playing into the picture here in grains and livestock. Any notes there or anything else you want to mention or reiterate for folks today?
Well, I'm going to reiterate, there's a lot of uncertainty in the world right now. We got a presidential election just officially started. I guess you could argue officially started with Iowa caucuses yesterday. Politically, you've got that going on. Half the world, I think, is going to vote for new elected leaders this year for the first time ever. There's going to be a lot of uncertainty in the world. Ukraine, what's going on in the Middle East. This market really does feel pretty ugly right now. We will get opportunities to sell that market. Right now, in the cold of winter, when you're locked in your office because no one wants to be moving grain right now, work up a plan. Give us a call at Ag Market, call any financial advisor you got. Now's the time to make a non-emotional decision of what you're going to do, and then try to execute the plan, not just for the 24 crop, but also the 25 crop. And once you make that plan, Jesse, I'm going to tell you, get the orders working, because when you do get moves, they are going to be very violent, but they're probably not going to last just based on the setup of the market.
Well, Jim, as you mentioned, folks can reach out to you guys with questions. I know agmarket.net. They can give you guys a call. And also, you guys got your conference coming up in Nashville here in just a few weeks that I'm looking forward to attending myself. Give us a plug for all of that real quick here, Jim.
Exactly. We've got a big a conference come up in Nashville. It is the Sunday, the first weekend of February. I believe it's the 4th and 5th, Sunday afternoon of the 4th. We've got a lot of special guests coming, talking about weather, Eric Snodgrass, and then on the morning of the 5th, or the day of the 5th as well. Please come. I think we're very excited. There is a lot to talk about. Jesse's going to be there. You ever want to meet Jesse one-on-one? You want to get that selfie with the man? He will be there. And if you really want, I'm sure he'll let you put you on that radio if you like to talk. But no, we are excited about it. We think, unfortunately, this market is going to give us a lot of challenges in 2024, but challenges also present opportunities if you prepare for it. So, call our office, 844-424-6758, or go to agmarket.net if you're interested in coming down into our conference.
I'll have that microphone handy coming up at that conference here in a few weeks. That is for sure. And again, learn more at agmarket.net. Jim McCormick, always good to talk with you, my friend. Thanks so much, and we'll talk to you again soon.
Thank you for having me on.
And that's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.